we're back with the Scuffed Realtor, Jake Rochefort, with our special guests here tonight.
Very professional guests tonight. I wore my suit. I wore my criminal suit
Jake
for everybody.
Rochefort and a secret guest who we will not reveal yet because he's slightly off camera.
Yeah, so we're not going to reveal him, even though he's super important to my life. He owns my house. But my brother Jake, the most important man in my life, my brother, not my father, my brother, is here, and my mortgage servicer Adam Dellemonico is here. I've been waiting a long time to have this one. This is an important one. This will get. It's school. It's fucking school time. So I've always wanted to have someone from the business, as many of you may know. Some of you don't know. I don't know if you know that. I grew up as a little boy selling mortgages in a chop shop when I was 15 years old, making cold calls off a leads list. And I would illegally call people on paid cash, bonused spiffed cash out of a little giant, out of my friend Ketty Monterano's father's house. It was totally illegal, and we scammed old people. That's what I did. I scammed little old women, and I told them interest rates that we basically didn't have, and I lied. I said we had 4% interest rates when I clearly couldn't even get them. There were 6.5% interest rates. The closing costs were $70,000, and I would rip them off with fellow cokehead Italian kids. I was 15, and I learned the ways in which I could write numbers down, and I could submit them to the government. Somehow, these things would be funded by banks, and I learned that this business is the shadiest business of all time. This is the true, as a car salesman, as a third-generation car salesman. My father is a car salesman. My uncles, my aunts, my cousins, my cat, my dog are all car salesmen. They're scum. There. We have guys that come from, we have my brother who ended up becoming a realtor. Realtors, the scum of the earth. Pond scum. Rat shit. And then the mortgage industry. Gambling addict. Pill salesman. Junkie, prostitute beating, rat shit humans. This is where we come from, guys. I can tell you right now, that's not the case here. I couldn't trust you guys more. I do. Adam, Jake, you know why. I can't sell my brother any more than I already have. Adam, you shoot straight. You've got a 24-karat gold reputation. You make bread. You don't fuck people over. You don't lie. I've known you for 7 years. I've never met you. I've talked to you on the phone. You put up with my fucking stupid ass, which is crazy. Good for you. I haven't had $1 until a couple of weeks ago, which is huge. And now I have over $1,200 in my bank account. That's real. $1,276. Checked it this morning. I'd eat shit. All right. I made over $31,000 last year. So okay, put that in your fucking pipe and smoke it. So a lot of people. One of the biggest things I have is I've learned a broker versus a credit union. That's a big one that I want to know personally. Like just what's the difference between you and my local credit union that gives me a low rate? Question mark.
Yeah, so what I always say is banks do a lot of things, right? They open deposit accounts, they have credit cards, they do home equity lines of credit, they do car loans, they do a lot of different things. They sell a lot of different financial products. Mortgage companies do one thing. We do mortgages. That's all we do. We don't have an option for depository accounts or credit cards. I don't do student loans. I don't lend car loans. We do mortgages. So, you know, it's kind of just taking the jack of all trades, master of none, versus the person that does one thing, and it's their bread and butter, and that's all they do, that's all they know. So because of that, we have a larger appetite to lend, meaning more products. We're more flexible with, as far as credit scores, down payment requirements. We're tied into all the different state housing agencies for like Rhode Island housing for first-time home buyers, Connecticut housing. So we just have a lot of different options that banks don't have. Now, banks, for some people, it's the right fit. You know, in some cases, for the right boxes of people, because that's what bank lending is. It's very specific. They don't go out of their box, right? If you have to fit these metrics. And if you fit them, then they can do a loan for you. If you don't, you can't.
Straight purchase, straight house, totally makes sense. That's going to work every time. Something that's a little bit more dicey, out of service, something where something fails. Perhaps is that what you're talking about? Like
it's just really like anything. Like they like lower down payment options. It's not bad loans because they're all backed by Fannie Mae, Freddie Mac, FHA. But it's just banks. That's the easiest way I can explain it. Is banks do a lot of different things. They don't focus on mortgages. It's one of the services they offer. So if you're going to have this big transaction, even if you are that cookie cutter buyer that's buying the 20% down, $800,000 house with a salary and perfect credit, again, that's all we do, right? Yeah. So we're very good at that one product because we don't have any other way of making money.
Rate shopping? Are they rate shopping you?
We get rate shopped from time to time, absolutely. What I always say is the company that I work for, it's been the biggest lender in Rhode Island for the last 5 years.
Yeah.
I've personally been the number one loan officer in the state for the last 5 years. We couldn't do that with high rates. So that's what I always tell people. If we had high rates, we wouldn't be the biggest lender, right? If I had high rates, I wouldn't be the largest loan officer in the state. So are there times where banks can undercut mortgage companies if they really want that client.
How much can they undercut you by?
Probably like 1/4%.
Which translates to what on a 500,000?
500,000, probably $90 a month.
And honestly, it's not even worth it because working with Adam Dellemonico or a mortgage broker, it changes the transaction process completely night and day. When you go to like a Navigant, I mean, they're great, or any.
Well, that's what I go with.
Yeah.
I go with my bank, and I feel comfortable.
But it makes the process just bumpy, and the only one that realizes it is the realtor and the buyer, and it's night and day. It's just the appraisal is bad, the timing is off. We're doing extensions because they're not meeting their dates because, just like Adam said, they don't do it all the time.
Okay, so if you're a content creator and your job is a little bit less dicey, if you're saying for your average person, like where it comes into, where the value really comes into and it starts to shine, is like you've got a blip in one of the qualifications, and something's like, well, I haven't made steady income for 2 years or something like that, whereas credit unions are like, no. I need 720 plus. I need you to be 720 plus. You've been working your job. You've been making $160 a year. All this shit has to be dead up perfect for you to even get in the doors of it. So you're saying that where the value starts to come to shine is where the broker is. Maybe you don't. Maybe your wife just got her job 9 months ago. Yep. Maybe this is the first time you paid off a loan. You know what I mean? Like you've got a little more flexibility.
100%. That's exactly right.
Okay.
These are well qualified people, right? These are people that deserve to buy a house. But if you don't fit the perfect box of a bank, then they don't have the appetite to lend because they have revenue sources from other avenues.
Yeah.
Right. It all comes down to making money, right? Yeah. And so that's all we do. So we're gonna figure out a way. We do loans for people who can repay the loans, right? Like we're not doing loans for people that can't qualify, and we'll work with them to help them get qualified over time. But we're not doing 2008 style loans. We're doing good loans for good people, but it's just a matter of being a little bit more flexible when it's not a perfect, check mark on every single requirement for a loan.
I gotcha.
Yeah.
So DSCR loan scams that are going on in Baltimore right now.
Yeah, they're crazy. I mean, it's coming back. I mean, non-QM, non-qualified mortgage is definitely picking up steam, which is wild. I mean, it's just history repeats itself, right? It's like literally just exactly.
Are there shops opening up right now in Rhode Island for? Not
so much. Rhode Island's an interesting market. It's super insulated because everyone knows everybody. And that's why, in Rhode Island specifically, if you screw people over, you don't have a career here.
No. I work for guys like I sign closing documents on trunks of cars. Yeah. I do mortgage fraud. I like fraud. Okay, I'm a criminal. Okay, no, I'm kidding. But that's where the mortgage industry comes from. I knew people who loved cocaine and jet skis. I mean, I'm friend. Tim Dillon talks about it all the time. Tim Dillon was a mortgage. These guys chew Percocets. Like Tic Tacs, and then they go sell little old ladies. God knows what for God knows how much. Sign here, please. They basically, it's like Weekend at Bernie's too with the closings. What happens in most of these other markets where I bought a house for $800 during COVID. Now it's worth $600. What do you say to that person that has?
Well, that's not really happening.
Shoot yourself, I guess.
Yeah, you should. Yeah. Do you have a gun? No. What do you say to anybody that was hasty during COVID?
Well, that would be a short sale if they had to sell it for less than what they paid for it. But that's not really happening. People that bought during COVID are making money off of those properties still.
Not around here. I'm talking. No, I'm not. I'm not talking about. I'm talking about like California, Market, Florida, Texas.
Yeah, there's definitely pockets of, and it's not. It's starting to dip, but it's not a huge falling off a cliff yet. The over inventory markets are where they're overbuilding. That's where it's happening. So the Carolinas, they're building 200 home developments. You can't do that in Rhode Island. You can't do that in Mass.
If Miami is one of them, right?
Yeah.
Texas, Florida, Arizona, the usual suspects.
Right.
Oklahoma, Kentucky. But what do you say to these people during those times where they say, "Oh, I paid $499 for it. My neighbor's house just sold for $360. It's actually nicer than mine. I owe $440." Where are we at? What do we do there?
Well, you can do two things. You can either keep it, rent it out, and pay the difference, the shortfall, or you can short sale it, which you have to talk to the lender to see you have to have a hardship, essentially. You can't just sell because you're negative equity. So
what do the hardships look like?
A divorce.
No. I'm saying
that's what is acceptable to an attorney and to a mortgage lender to accept the short sale in the first place.
Oh, okay.
So you have to have a legit hardship, a job loss, a health issue. Those are the things that would push the short sale.
Does bipolar disease qualify as a health issue? Really? Yeah. I'm bipolar now. I can't pay my bills.
Getting your weed license, yes.
Yeah. Okay.
Yeah, because it's also like you at that point, if you don't meet the hardship requirement, it would just and you couldn't pay your mortgage and you couldn't sell it because then you can't pay back the loan, right, in full. Then it's just a foreclosure at that point. Okay. And a foreclosure, whatever the price is, the bank just buys it back and then they just try to get it off their books. There's an asset manager that handles the sale. They work with a realtor and just try to get it off their books for whatever price that they can. But short sale market, we're not really there yet. There's some pockets of the United States that it's happening. But
it's going to be fun.
Yeah, it's happening in those overbuilt, high industry markets. New England, it's not, like you said, you can't build houses, so it's nearly impossible. We still have a massive shortage. We're still in a seller's market in Rhode Island, in New England specifically, but I know there's other parts of the country that tune in here. So, it's tough. I mean, there's opportunity in that too, like short sales and foreclosures like anything else. But who's to say where the bottom is? And it's just tough. I don't know those markets as well, but I just know that those things impact your credit drastically. It's really hard to buy a house after that in a short period.
I did one. It's really great. I told the bank, I said, I've got a hardship. And want to know what it is? Eating mushrooms quarterly and wanting to make videos on YouTube with my pals. So I'm not paying another bill for a fucking long time. And I rebuilt my credit in 24 months. I was buying cars. It was fantastic. I had a 400 credit score. I was making 90 grand. It was easy. Mwah, it was nothing. I went right through it. Breeze, go. Relying on the $15,000 puts people in a mindset where it's like, I feel like sometimes it's dangerous because we know the market in Rhode Island, right?
Totally.
Like, what the fuck are we doing with $15,000 made the difference? Now I know it's totally legit. I'm not discrediting anything you guys are saying. But what I am saying is, like, you got to use it, and I guarantee 70% of the people who use it are using it for like the wrong reasons, where they're really going and buying a Lexus when they should have went and bought a fucking Corolla. With
their savings that they get, because it goes directly. They don't ever touch that money.
No.
Yeah, but because that money goes directly to the closing
to
attorney.
The top of the
to the loan. Exactly. So it just helps
funnel the money, Nick, and spend it yourself.
No, it's just like these people, they work their ass off. They saved like $35,000. You're like, I'm putting myself in the shoes of like, I'm a 26-year-old drywall kid, right?
Right.
I got my girl's a nurse. She's
perfect example.
She saved up 12 grand. I've saved up way more because I'm a guy. No, I'm kidding. I've saved up 22 grand. I've got 33,000. I pair that with my 15 grand. I've got 47 grand down. 47 grand gives me a 10% LTV. But I'm buying a condo that's 470,000 that should be 300 grand.
100%. Yeah. No, and that's real, and it's really for the people that like, let's say they don't put down the full 47 grand or the full 10%. Now they walk into the house having to put down a little bit less money, and they just have what I'm a big advocate of is you can't go into a house with no money. Like even if you qualify for it, like it doesn't mean you should do it, right? And I have these conversations all day. Like I can qualify people for things that I can't tell them you can't do it. It's fair housing. If you qualify for it and you want to do it, you're an adult, go do it. But I'm never going to be like selling it like you should do this.
This is an opportunity for you to put no money out of your pocket. Like this is and this is why you're here. And it's not my cokehead friend Matt who also sells things. This is what I try to you can be honest. And it's a very easy line where you could be selling shit.
Right.
And that is one of those lines where right there you can draw that. And people do that. You'll get that spiel at a bar. Some of these people out there, you'll hear things like that at a bar or at a restaurant. Oh, I sell loans. You actually don't even need 0%. That should be the biggest red flag in the world. That's like a prostitute. You don't necessarily need to wear a condom with me. So that's the upside of me. Yeah. Starla, Crystal Starla. That's why I've been working the Vegas Strip for 45 years. That's her killing flies on her thighs. But that's good that you acknowledge, because I also say if we're talking 0%, $8 grand down on that shit, like we shouldn't even be looking at houses.
Yeah, no, 100%. And so what that type of program allows for people is to keep money in their pocket to be able to have that, because I'm a huge advocate of like you have to have reserves. You have to have, because shit goes wrong with houses all the time, right?
Yeah.
Like if it's not new construction, you probably have a project right around the corner. And so when people are going into houses with $0 in their pocket, that's a problem. Because then what? They're already living paycheck to paycheck, like the example of the 600K person.
Yeah.
But like you can scale that down. Like a lot of people are living paycheck to paycheck, where if something's going to cost them $5 grand right after they bought a house, they don't have the money for it.
Yeah.
So I'm not, like that's the kind of stuff where that program comes into handy, where it can just keep people with some money in their money in their pocket to be able to keep their reserves for when things go wrong. Yeah. Inevitably.
It's the TV couch money.
It's not something that like, oh, I get this 15K, I'm going to go buy a house. No, it's like I could have already bought a house.
Yeah.
But this is going to just help me keep more money in my pocket. Like that's the differentiator. It's not like, oh, you can buy a house because you get 15K. Like that's not how the program should ever be sold. It's just like, this is going to help you get over the hump and keep more money in your pocket so that you can just be ready for anything.
It's like a rebate on a car that you found out that you're already going to buy anyway.
Right. You were going to buy it exactly.
Yeah.
Exactly.
You were going to get the Accord, and you were like, oh, there's $1,000 rebate this month, and you're like, oh shit, cool.
It's $1,000 that I
whatever. Good. I'll take
Typically,
it.
what's the credit score like minimum? And
660 for that program. Okay. 660. Yeah.
That's good that there actually is a.
It is a. There's been over the years. There's been some that I'm like, I'm not even going to talk about these because these are like shit programs. But this one is legit. It's zero interest. Like they're literally giving $15,000. You do have to pay it back when you sell, but it's that time value of money, right? In 10 years from now, that $15K that they gave you is going to be worth a hell of a lot. It's nothing. Yeah. So it is a legit program.
Basically, what I see is you go into these exploratory prices in some of these regions where. I bought the house for $300. My neighbor's house is $900, and now you're selling it. We're Rhode Islanders. We're, for lack of a better term, we're fucking retarded sometimes. So when you hear your neighbor is getting $1.1 million, you're not going to be the guy who's like, I'll just take $900. That's fair. So you're like, I have to get a number. Now, it won't appraise. You're in a position where basically the house isn't comping out. What happens to these people who are have you been in a position recently in Rhode Island where people are buying, they're really like kind of like stretching to make this deal work? What are you saying to these people that are like, look, man, the house isn't comping out. It's like on paper, according to the bank and are you seeing that? Like, what does that do to you and some of your loans?
Well, I mean, are we the buyer or the seller here?
You're the buyer.
Okay, well, the seller has 3 choices. They can either lower the price of the appraisal value, we can get another appraisal and see what that comes.
Who pays for the appraisal, the second one?
The buyer.
The buyer.
Or you can
How much is
negotiate
that?
with the seller. Typically about $550 to $600.
Yeah.
Depending on what it is.
Yep, exactly.
Yep.
So, but you can split the cost depending on how you negotiate that.
Can I bribe the appraiser?
No.
Okay, I'm just wondering.
But I mean, there's reasons for it. But the seller has 3 options. They can either lower the sale price to the appraised value. They can take it off the market, and they can put it back on the market and try to hope that they get a different buyer, and it appraises even higher or a different type of loan. Now, the first
That seems
buyer,
nuts, doesn't it?
It does. If the first buyer was an FHA appraisal, that appraisal is attached to the address for 6 months.
Ooh.
So now, if they take it off the market or they try to find a new buyer, if the second buyer is also FHA, their appraiser is going to see that bad appraisal value. So that's a wash. So the seller really should just come to reality and either get a second appraisal and see what the value comes in at, and then sell it for that.
Well, are you seeing a lot of that with some of these houses?
Or the
where
buyer
you're
should
at,
walk
Lincoln.
away.
Lincoln's like one of the best ones because it's hot. It's it's one of I call Lincoln Smithfield maybe the hottest market in the country. One of them.
Yeah, it's up there. Yeah, I mean, so the reality is during COVID and right after COVID, it was when the market went nuts and these houses were selling for 50, 100 grand over asking price.
Yeah.
You know, what do you expect? Like I remember talking to an agent when an appraisal came in short and they're all like, oh, like that's crap. Like go get another appraisal or like, let me see. And it's like, you listed it for $150,000 less than the offer that you took. Why didn't you list it for $150,000 more if you thought that's what it was worth?
Yeah.
Right. So it's like people are surprised that these houses weren't appraising when they're selling for 100 grand over the asking price. Now the market has cooled down a little bit to where it's not selling ridiculous amount over. In some cases, they still go for more than asking price, but it's not nearly what it was. So the appraisals aren't so much an issue. It's really an issue when because they're being comped out correctly for the most part. There's some, and the market is cool enough to where if they're mispriced and if they're overpriced, they're not selling.
Yeah.
Where before they were selling no matter what.
Right.
Right. So it is a different market to where it's kind of insulating buyers from having to deal with that. Now I've dealt with some low appraisals, and the conversation with the agent, the buyer is just like, look, this is where are the other comps? If you think it's different, show me the other comps, and we'll rebut the appraisal. Yeah. We'll try to dispute the value and say that it's more because you can rebut.
And is a rebuttal basically just a phone call where you say, "Hey, you're not looking at this."
It's a form submission that you submit other comps. Okay.
Basically. That works a lot. So I got one up $35,000 last year, and that worked.
Yeah, because they missed something or because it's human. It's all an appraisal is an opinion of value. It's one person's opinion of value based on comparable homes that have sold in the area. So if they didn't use a comp, or maybe a house just sold and it sold after the appraisal was complete, and that couldn't be taken into consideration before, and now it can. But again, it's in the case that Jake said, the sellers need to come to reality, and a lot of times what we'll see is buyers get a lower price. Now, what I always tell buyers not to do is don't buy a house and expect the only reason you're buying it is because you think it's going to appraise low and that you can renegotiate the price at that time. Yeah. Because if it doesn't appraise low, you're left holding the bag, like you're buying that house. Yeah. Like you're under contract. It's illegal.
Or you're losing your deposit.
Yeah, or you're losing your deposit. So people will be like,
one buyer.
Yeah, it happens all the time. That's like, oh, well, my appraisal's here, so I can put in an offer for $500, and if it comes in at $450, then I can buy it for $450. And I'm like, well, there's a scenario where that can be true, yes, but that is a ridiculous strategy because what happens if it comes in at $500K?
And they're doing that to win the bid in a multiple bid situation. Typically, they overbid it just to win it. So now the seller picks their offer and they roll the dice and they hope.
And they hope that it comes in lower. It's ridiculous, and it's just like, well, you shouldn't do that. That's a bad idea.
It's like it's like clown strategy.
Win the house.
It's like calling the other dealership at the guy's desk. It's just like, is this you play this game?
Yeah, it's just a bad idea.
Your integrity sucks.
So it's tough for buyers in low appraisal situations, but sellers coming down is usually what we see.
Hit me.
Keckfuck says, VA loan? Less than 2 years left in the Air Force. I hate Florida, but I'm stuck at Eglin Air Force Base. Everyone here buys homes.
Thanks for your service.
Yeah. VA loan, best loan out there by far.
Really?
As it should be. Hardest loan to qualify for. You got to serve the country.
Yeah.
Really?
Right? Yeah. Hardest qualification.
I like that.
Yeah. Best loan by far.
One of the hardest loans to get accepted as an offer, though. Just
which is
FYI.
crazy. Which is crazy because it has the highest closing percentage of any loan program. It closes at a higher rate than any loan program, except and realtors don't like it for some reason.
We don't.
Why?
It's a no money down type of thing, and it just goes to.
But it's a highest chance of closing.
I know.
So that fact alone is like should be a mic drop. So I always call the listing agent and be like, look, this VA loan's stronger than your conventional loan. It's 95% chance it's going to close. That's just like the average of the close rate for VA loans. Best loan by far, 0. No mortgage insurance. You don't have to do 0% down. You can put it down. Lowest interest rate, waive fees. It's just like, I mean, again, it's for veterans, so they serve. They should.
Veterans go hard when they start purchasing though. Just straight up, I've sold a lot. That's, you guys know. Well, let's have fun now. Let's talk about what you do when you have to buy things. They go like this. Camaro, Mustang. like they can't stop. Like I've sold so many veterans cars. They're like, all right, fine. What else do you have that's turbo? And like they go like hard when it comes to
Is there a cap on VA? Like what they can
What, like the what cap? Like the debt to income? Oh,
yeah.
There's a the debt to income ratio, same kind of requirements, but there's no loan limit. You can get a VA loan for as much as you want, as long as you qualify for it. But best loan out there by far.
You can only have one VA loan at a time.
You can only it's based on your entitlement, so it depends how much you have on your VA entitlement. Like you can have another VA loan, it's just you may not be able to do 100% financing for both of the VA loans.
You get it.
So but it's a great product, great loan.
What do you in the VA loan is? What if they have big down payment?
Good, do it.
That's even better.
Do it. Yeah, do it. I don't dissuade people from doing. I'm not like, oh, you're a veteran, do 100% financing. Bad idea.
Yeah.
If they're comfortable putting down money, it's just going to help the overall situation.
100 keys. That's cool.
Great.
That is good. You're doing it. God bless you. I can't imagine managing 100 people behind those doors. All I would want to do is just beat the shit out of my tenants.
Get some wild stories.
Oh yeah. Oh yeah. Just people flushing.
I mean, Nick and I were collecting rent when we were 12.
Yeah. I used to collect rent for my science teacher in high school.
Got brass knuckles on.
Yeah. Where's the rent? And you're like, watching crackhead ladies.
I'll see you Monday.
Yeah. Heavy threats to a crackish woman. Yeah. That's just the truth. That's why I am the way I am.
How do I go Chinatown mode and put motherfuckers in tenement housing with paper-thin walls? Never landlorded, so I'm curious.
You don't want to do that. I don't think it's landlording. You guys got any input in landlording? Starting off with these landlord. I don't. You guys have at it.
Yeah, no, I mean it's just it's not all it's cracked up to be. I have rental properties. I have property managers for all of them because I was like, I'm gonna do this and collect rent, and it's just not worth it.
What happened?
Ever. It just there's issues all the time with houses, just all the time.
What do you mean?
It's passive income. It was nothing passive about it. It was active investment of all time, and I'm not handy.
You did the four. The fours, the threes. You were buying.
Yeah. So I have multifamilies, and I still have them, but I just have a property manager. You pay him 8% of the rent.
8%
is not bad, and you don't have to think. You don't do anything.
You must make a fortune on these things.
No, you don't. That's the thing. Is like you don't make a lot of money
banking money on
You're
these.
one big issue away from like your entire cash flow just being gone.
Yeah.
So that's why when people get into it, when they're like, oh yeah, Mike, after my mortgage, tax, and insurance, I'm making $500 a month. It's like, well, what about everything else?
So what you're saying in the end of the year for managing just tenancies who think you're a pirate, you get to make over $300 a year?
Yeah, it's crazy. It's
My
crazy.
wow making a noise. Why the wow making a noise?
Actually, I got legitimate conversations that you'll have.
Yeah. What did you buy? What
cool.
city?
So Eastern Connecticut, I have 2, and then
Really?
Bristol, Rhode Island. Yeah.
Wow, you got one in Bristol. Good for you. That's the nice one that you paid a ton for, I'm sure.
Yeah, I have 4 in Bristol. I got lucky. Yeah, before Bristol went bananas.
Yeah,
How many
Bristol's
units in Bristol?
2 twos and 2 singles. Because I have college students. College rentals are the best.
Yeah.
College students, college rentals, the best thing of all time. Students, literally, this was before I got a property manager, do a walkthrough every so often, make sure the house is still standing. It's in a residential neighborhood. It's a great house. A bunch of lacrosse kids in there. Like, hey, by the way, we haven't had hot water in like 3 weeks.
Whoa.
And I'm like, dude, you should call me. Like, that's a problem. You need to have... They're like, I thought that, we didn't want to bother you, and
Goodbye.
cold showers. I heard cold showers is like good for you.
I was watching Rogan.
Elliott.
We do cold showers in the morning. And I'm like, that's crazy. But like, you have tenants that'll call you for anything.
Drips.
And then you have college students who have been just showering cold for.
Yeah, that is not regular tenants.
No, so that's why
that's
the
dream
biggest
shit.
advocate of college students and tenants, and their parents co-sign, and it's great.
So your tenant complained about her faucet was dripping, and she's like, "Well, I don't want my water bill to go up." I'm like, "You don't even pay the water bill." She's like, "Well, you need to come fix it now. My hot water bill's gonna be high because I pay for the hot water." I was like, "This is a nightmare."
Yeah.
So you sold it immediately. Yeah.
Those are tough. Those are tough.
I sold it.
Yeah, I mean, Eastern Connecticut's the only place that it makes sense right now. But student rentals are awesome.
Student rentals, I always say the price of, if you want to get into it, you chase the schools. The cost of tuition is never going down. You look at the cost of room and board. If the university was allowed to run willy-nilly in every single city, they'd buy every single fucking tenement house and they would run it. They didn't.
100%.
They had to be told to stop doing it in Providence and Brown.
Yeah.
They were like, yo, chill.
That business sold for like $80 million a couple years back. The 02, 908. Is is Eaton Street on with PC.
I sold cars with that kid.
No way.
Yep. And he was a normal dude.
Crazy.
Yep.
They sold it to a couple Cornell kids a couple years back.
Yep.
$80 million.
Yep.
For like for 100
Eaton
houses.
Street. Yeah,
Eaton Street.
It was, when he started that, he was like, he was a cool kid. He drove a Lincoln LS.
The
Like, he
math
was like
just
not a
maths.
rich kid.
It's great for the parents. They save money from room and board. It's right next to the school. It's awesome. Rent per bedroom. It's
If
awesome.
you want to get involved in that, I do say go to institutions that are. I went to Wagner College. It is a useless $40,000 a year school that means nothing. So the parents didn't care about the kids because they didn't even know how good the college degree was. So you have endless amounts of money. Roger Williams is another one. Salve Regina is another one. These are schools that are expensive, but no one knows why. That's where you want to buy multifamilies.
100%. Yeah, because you parents on the
Quinnipiac.
leases. Parents on the leases. It turns over every year, but there's housing shortages in so many colleges because they're just admitting an immense amount of students and don't have housing for it.
And they need it.
So,
they can't building a new dorm is a lot easier to be like, oh, we have a lot of off-student housing. It's better. We have a
100%.
program.
So it's a good area. Just if you have like just a regular house, your occupancy is going to be absolutely shot right now. There's not a lot of people that are going to
Quality of the house is really low.
Yeah,
Price of the house is very high. Very ugly fucking real estate.
It's actually crazy how fast Airbnbs just took over the White Mountains too. It just
our buddies have one out there.
Yeah.
Not the houses up there are not particularly good deals. There's a company called Owl something. They're crushing it.
Yeah.
They're building these New Hampshire.
Oh, that's over by oh my God. Yeah, it's a golf course over there. I know exactly what you're talking about.
I stayed there. The tennis resort thing.
Yeah, it's really nice.
Believe your eyes.
What?
I'm just saying the place.
Oh yeah, North Conway.
It's
Owl's Nest.
Owl's Nest. That is what it is.
Owl's Nest Resort.
That's exactly what it is. Yeah,
these guys build 200. Yeah. Spa, golf. This is a New Hampshire exclusive thing. Like, no brain in Rhode Island would ever think about this.
No.
And these guys are like, we've got snowmobiles. We've got tennis. You like chicken wings? I got chicken wings. You like pizza? Little guy. Pizza for the little guy. I got 3 pools. It is so, it's so much. And it's all in. And we stayed there for, it was $389 a night.
Wait, is this the place you...
So we stayed there for one night, then we stayed at Chris's place. It was New Hampshire. New Hampshire is someone poured Bud Ice on the top of an Arctic cat, and then these fucking people came out of it. It's a wild place.
Margaritaville?
What's that?
Like Margaritaville?
Yeah, kind of.
New Hampshire is wild. It's beautiful. It's quiet. It's slow, but then it's just like
it's its own animal.
It's crazy. Live free or die. I mean, that's the
it's on the plate. I mean, but there's like 3 different kinds of pools. There's you can fly fish, you can golf. This is basically the development.
What's it called in Rhode Island? The what's the you have
the preserve. It's like the preserve.
Yeah.
Yep. This is a little more like
Yeah.
This is higher volume. The preserve is just wild. The preserve, and then you have the other one in Portsmouth. You guys ever saw one of those?
No.
There's another one in Portsmouth, $1 million a piece. They're like the fishing. They have their own marina. It's not. You're drifting off, Jake. Here we go. Someone get Jake a EpiPen. So we stayed on Lafayette Road, unit like 65. But these are a little more like accessible, affordable.
Yeah, these are nice.
Wide open development, but you can tell like. We checked in at night. We wake up in the morning. I mean, construction everywhere.
Yeah.
Like big, heavy, like stuff you haven't seen around here. It looked like Tennessee level construction. Where
You must have been pleasant.
oh, I was great about it. I checked out immediately. But you want a steakhouse? We got a steakhouse. We got a chop house. This is the stuff. In my opinion, this is the sort of stuff that will save New Hampshire. It will sort of bankrupt the Airbnbers of North Carolina, but there's still no hotels whatsoever.
None. Yeah.
What are you getting a night?
I get $980 a night.
$980 a night.
Yeah, I mean it's a huge house, 16 people, indoor pool right in the White Mountains, like highest peak in
When the fuck did you buy this thing?
2019.
Jesus Christ!
Time, 616K.
And then they had like this big
Steel.
Airbnb issue, right?
They had a huge ban right after a month after I bought it.
Yeah, I remember that.
And then enough people that
You making $15,000 a month on this thing?
well, the expenses are ridiculous.
Yep.
Yeah. So no, not like with all the.
You rent this thing 200 nights a year?
I rent it. It's only like a 45% occupancy.
Okay.
So it doesn't need to be rented that much for it to at least break even. But it's hard. The pool's expensive. The oil is ridiculous. The landscaping. It's cool. It's a cool place.
You go up there a lot?
I've been there twice.
In the 6 years?
In the 6 years, yeah.
Oh wow.
Yeah, it's a cool spot. It's a really cool spot.
And is it like you're a super host? Is that your only Airbnb?
Yeah. The property manager, that's all he does, and he's phenomenal. He's super hostess, gets great.
Do you have to salary him?
No, he just gets. I think he gets like 18% or something like that.
Yeah. Okay.
20%, because a little bit more because the turnover.
He handles everything.
Everything.
Okay.
Every single thing. Only major issues are like if he has like ideas to like upgrade and stuff or whatever. But
Rent
he's
out
great.
mountain bikes.
Yeah, he's great. It's awesome. Another thing, property manager for Airbnbs are a must, and you have to have something unique with a high average daily rate. so that your occupancy can be low to break even. You should shoot for 25% occupancy to break even.
Wow. I'm figuring at a. Have you ever sold I had a hotel buyer in my backyard one time. What do you think a consideration of a hotel buyer's?
I couldn't even guess.
Yeah, this is what I would think. If you were buying a hotel of like, let's just say for round numbers, 20 rooms, what would you do your own math on? You said 25% occupancy.
Yeah.
Guess what a hotel buyer does?
What? Take
a guess. 66% occupancy. I was like, that's fucking crazy.
That's crazy.
That's crazy.
That's crazy.
And they go, that's the national stat. That's the standard. I said, get the fuck out of here.
Yeah.
This is like guys who buy like 200 hotels a year. I had one in my backyard in Los Angeles, and I'm grilling this guy with questions. He's like, yeah, we own like 20,000 keys, blah blah blah. They call them keys, and I'm like, wow, all right, on an Airbnb and the break even. So I ran my Airbnb. I would rent it out. I usually figure 200 nights a year, which is that's about 60 cents.
Yeah,
that's not good. That's not.
Yeah.
You figure a 25.
Because I'm a big non-Airbnb guy right now because
you're at 90 nights a year.
Yeah. Now, if you can break even on, I would never consider an Airbnb unless it breaks even for 25%. You can't really find that right now because there's way too many people that want to do it. Yeah. So there's an oversupply, and then all these towns are just trying to ban Airbnbs. Or just put restrictions on it, or put extra taxes, or whatever the case may be. So it's really hard. I'm happy I didn't go all in. I just did the one, and it's bulletproof because I need like less than 25% to break even. So it'll be fine.
It's you're in a.
It's 4 seasons.
The New Hampshire, Maine is so underserviced outside the major cities.
100%.
It's crazy. So you can go up there and do that. Bridgeton, Maine, all these lakes.
It's 4 seasons.
Yeah.
Right?
Yeah.
If you're a skier, you got skis. The foliage is beautiful.
Mountain bikers in the spring. You got the beer guys. I had one in Mass. That one you actually. Anyway. Yeah, you might have did that one. The Southbridge House. Maybe.
I don't remember.
I had one. We did Airbnb. It was good. It was $289 a night. It was rented like crazy. It was a cool house. It was a stone house. It was right near Treehouse Brewery.
Oh, nice.
So everybody was Treehouse Brewery. But we self-managed. Problem. Shouldn't have never did that. And then I had a tiny house here. They're about as legal as growing. They are. But that was booked as well. $150 a night here, $289 a night there. I'm like, this is great. I'm making $40,000 a year. It's cool. Bottom line is I just got stopped. I lose my wife to correspondence. She's just nonstop. Like, can I bring my cat for one day?
It's crazy because they're only there for a short amount of time. They want perfect stays while they're there. So their complaints are like, it's ridiculous. So can't self-manage 25% break even.
Do you have people, if someone's transparent with you on a buy for Airbnb, is that a red flag, or is that a problem for
me financing? No, you can. It's actually they accommodate it much more than they used to. You can actually use like AirDNA for rental analysis, so they can, if it's an Airbnb area, like usually when appraisers use rental income to qualify, they're using it based on long-term rents, so like yearly rents. What can you rent the house per month? Yeah. You can use short-term. They'll allow short-term rental income to be used if it's in a Airbnb. Like if it's it has to make sense. Yeah, if it makes sense, then you can use, if you have the data for it. Yeah.
Wild. Yeah. Because it's failing.
In a lot of places.
Airbnbs, fantastic.
Airbnbs are crazy because people just bought them. They're just normal houses, and they're expecting. If you don't have something cool to get people to your house, you're fucked.
That's what a lot of people are like. What? It's got bed. Yeah, and I'm like, it's got. Thank you. Good.
Yeah.
Does it have bed?
1,000 others. Yeah. So you need to have a Airbnbs.
You need mountain bikes. You need snacks. You need wine. You need
a pool in your house.
Yeah, a pool. Yeah,
quite literally. Like that's like it's. You need something that really sets it apart.
I know, it's true. We had people shooting music videos. There's blunts, people fucking on the thing. It was just not. Basically, your house is a nightmare. Used for everything under the sun if it's affordable. So, but we were in the middle of nowhere. We were in a town that shouldn't even, like, if there was a hotel there, if there was a 3-star hotel, you'd get $89 a room. If there was a Westin there, you'd get $140 a night. So that's just because it was an underserviced, no hotels.
That's cool. That's perfect.
But Airbnbs are like Nashville is coming apart of the seams. Everybody bought an Airbnb.
Scottsdale.
Do it. Scottsdale. Yeah. Right. Housing inventory. Tons of it. Oh, fuck it. We'll rent it out and we'll just use it a couple times a year. Never going to happen.
And a chat here from J Money. Getting real estate license before sale of our first house. Buying new construction with 20% down. What are my options on the sale/purchase before hanging my license versus after? What are red flags looking into firms?
Red flags looking into firms?
Oh, yeah. What kind of firms are brokerages?
I would look at a firm that has training for you. Since you're a new agent, a lot of luxury firms or higher end firms don't have any of that training. You maybe join a team so you can work off their listings and do open houses and get clients that way. Attend a lot of office meetings and know how the company is run. And I would look at who has the most signs in the neighborhood. And if they have a strong reload department, that always helps with year over year. Maybe 3 or 4 more deals a year if they have a strong reload.
Relocation rentals and what is what you're talking about?
No, just relocation department in your real estate company.
All right.
So do they have a department? Does it exist? And And is the firm do they present the listings in a nice way to the open market, or do they suck?
Yeah. Where are you?
Yeah.
You know, and where are you? Are you in a flooded market where there's 9,000 real estate? Are there a lot of mortgage brokers in the state?
There's really, it's not an oversaturated market. No.
Okay.
Yeah.
Where is it an oversaturated market?
An oversaturated market is like West Coast.
Yeah.
Think of higher loan amounts, like the highest loan amounts. Those are the most saturated markets. So like California.
Yeah. I like
Oh, with realtors though, right? I mean, it's saturated with realtors.
What is Rhode Island?
Yeah.
Rhode Island is definitely. There's a lot of realtors. Yeah.
There were like
Which is
9,000 or 7,000
Yeah, there's a lot of
active
realtors.
realtors when they should have been like.
But a lot didn't renew last year.
Good.
Well, a lot of loan officers didn't renew.
Sick based.
Fuck 'em.
Go
Couldn't hang.
die.
No, there's too many that don't know what they're doing.
Yeah, hit
Yeah,
the
no, I'm
bench.
sure it makes for a
Transaction
rough.
very difficult. I mean, you must deal with that a lot. With
All the
Hit
time.
the showers.
It's just a nightmare.
Yeah, I mean, you guys, you're in that. There were. This was a mortgage city. You used to be able to open up a. I mean, I literally worked in a basement of a 3-family.
Yeah.
Yeah. I mean, the place I worked, we had a room full of high school kids working there, cold calling, and then I got $100 a lead. Shout out Clippers, Carlito McCheese. Who else? Carlito McCheese.
I don't know that one.